What if I told you that in 1995 I got shot at in Jersey City and I was days from death? What if I told you that I went to rehab shortly thereafter and then I got a job on Wall Street? And then by 2008, 9, and 10, I was making seven figures a year. In 2011, 12, I almost lost that business. And then what if I told you in 2023 we have a business valuation of north of $30 million? Would you believe it? Well, check it out. My name is Rob Gill, founder of Epic Financial Strategy, CEO. And today I'm going to talk about the three types of life insurance and their hidden benefits and how that has taken me from the streets to the suites. All right, folks, so what is life insurance? Well, life insurance is a contract between an insurer and a policy owner that guarantees the insurer, which is the insurance company, pays a sum of money to a named beneficiary when the insured actually passes away. Now, this is according to Investopedia. A little step further, key takeaways. Life insurance is a legally binding contract that pays a death benefit to the policy owner when the insured person dies. For a life insurance policy to remain in force, this is important, a policyholder must pay a single premium upfront or pay regular premiums over time. And we'll get into what this looks like. When the insured person does die, the policy's named beneficiary, and it could be more than one, will receive the policy's face value from the insurance company. Term insurance policies expire after a certain number of years. Permanent life insurance policies remain active until the insured dies, stop paying premiums, or surrenders the policy itself. And last but not least, a life insurance policy is only as good as the financial strength of the life insurance company that actually issues it. State guarantee funds may pay claims if the insurer can. So, check it out. If you look at money and if you understand banks versus insurance companies, banks give you about $250,000 worth of insurance protection. So if you have $1 million in a bank account, it's an individual bank account, and the bank goes belly up, well, you'll get $250,000. If you look at an insurance company, they live by a set of rules that are so much more higher. The standard is not even close. So if the world was going to crumble, the last thing that is standing is the whole life insurance companies that have the best fundamentals. So keep that in your head as you're working through and understanding what's happening. Life insurance, there's 33 reasons why we love it. Obviously, the death benefit is the 33rd. It's the living benefit that allows you to live the life you want to live, to go from the streets to the suites, to understand how to get money, time, freedom, to understand how to get multiple use of your own money, and yes, how to become your own bank, how to use the money in the policy over and over again so you can achieve the financial freedom that you desire. So check it out, folks. At the top, I spoke about three types of life insurance. Let's get into number one, which is term insurance. Here's the definition. It's a type of life insurance that guarantees payment of a stated death benefit if the covered person dies during a specified term. Now, it's good if they die during the term. However, if they die after the term, it's like wasted money. So real simple. Think about if you bought a term policy and there's a 20-year term on it and you die in year 21, well, then your family doesn't get the death benefit. A lot of people call it renter's insurance because you actually don't own it. You're just utilizing it for a certain amount of time. As you watch this video, we're going to separate the men from the boys, the women from the girls, and show you how to use insurance in the right way where the multiply factor is in your favor. Number two, whole life insurance. This is the holy grail of money, folks. Here's the definition. Whole life insurance provides coverage for the life of the insured. In addition to paying a death benefit, whole life insurance also contains a savings component in which cash value may accumulate. Death benefit, good for your entire life. So listen, we don't know when we're going to die, right? So you always want something that's going to be there when you do pass away for the fam. But it's popular really for entrepreneurs utilizing certain financial strategies. So you may have seen videos where we talk about a Swiss Army knife. Whole life insurance, if it's utilized in an overfunding capacity where you can leverage the money, create other investment opportunities along the way, is a powerful tool. And that's why I like to call it the holy grail of money, because what it is not only gives you the value of your future self while you're in the wealth accumulation phase, but it also gives you protection from the things that you can't control. Stay tuned, folks. So here it is, folks, tail of the tape. There's always comparisons. We're going to go term versus whole life. We'll talk about term first. And remember, we already said it was renter's insurance. If you really understand term insurance, and according to Bank Rate, you'll see that 99% of the time, term policies don't get cashed in. What does that mean? Remember, it's only for a certain amount of time that you have the coverage. 99% of the time, people either outlive it or they cash in the policy to get a different policy. That is a scary statistic, but let me just give you 3 bullets. Term insurance usually has lower premiums, it does have a death benefit, and there is no cash value. So if you're buying a policy and you want to be able to have everlasting death benefit, but you want to jack it up a little bit, some people add term to their whole life to get a bigger death benefit. We could talk a little bit more later on about that and get into deeper detail, but I just want to let you know where that plays in. But more importantly, let's talk a little bit about the whole life side of the table, because this is where, once again, the holy grail of money, where good things could begin to happen. Usually it's higher premiums. Let me correct that language immediately and say you're moving money from one side of the balance sheet to the other. There is a death benefit. You get guaranteed rates of return within the contracts, plus dividends that aren't guaranteed. There is cash value. You could borrow against and earn interest, mutual insurance companies, non-direct recognition. So let's say if you have $100,000 in cash value and you want to borrow 50, either go finance your own debt for a car or buy a piece of real estate, that 100 is still going to earn a guaranteed rate of return plus a dividend in that policy. It's a powerful tool once you have the right financial educators on the same page for your benefit, and it's all lined up with your core values and belief system. Now let's get into the third type of insurance, which is universal life insurance. Call it permanent term insurance. Higher premium than a regular term for insurance that never goes away as long as you pay. So it does have that whole life component. You got to keep paying. However, that cost of insurance creeps up as time goes on. It does have a savings component. If indexed universal, part of the premium goes to the death benefit. Part is held by the company in an indexed. The cap is typically 9%, so that means if the market earned 30%, the S&P that year, you're capped at 9%. Conversely, you have a baseline of 0, meaning if the market or S&P went down 20%, you're at 0. The one thing that won't change, though, is each year the cost of insurance increases, unlike whole life, right? Just so you understand the difference. However, universal is a good complement to whole life if it's structured the right way. If you want to learn more about that, you could always go ahead and click the link below to get a meeting with one of my experts here at Epic Financial Strategies. There's no obligation. There's a much deeper conversation in that, but it does have its proper place if it's structured the right way. Shh. Let's get into the secret benefits to whole life insurance. Investments have risk. Whole life, which is not an investment, has guarantees, and it could complement your current investments if it's structured the right way. Let's say, for example, you have money that's in a wealth management account. You have money in an IRA. Wealth management account is, the risk of the market. IRA, 401k are those retirement plans that you can't access till you're at least 59 and a half. Whole life is like a giant Roth IRA, except it doesn't discriminate, and you could put a lot more money in it. That becomes a perfect complement, not only from your other buckets of money, but also from a tax strategy and a tax mindset, because the whole life, as you take distributions later on in life, it's all tax-free up to basis, and to maintain that tax-free status, you would have to borrow from the policy. These conversations are a little bit deeper, and I understand that. It's important that you understand the importance of what you want, how you want to get there, and the right people on the same page for your benefit. All right, folks, so thank you so much for staying with me. We talked about the 3 different types of insurances: universal, whole life, and term. And it's important to understand that if you look at your money as a map, we'll call it the financial freedom map, and here's your destination. You want to get here to retirement, you want tax-free money, you want guarantees, but you also have money in other buckets. And in order to get there, you have to be about honest where you are now, right? So what we're suggesting is to get a free life insurance evaluation. Go ahead, click that link below. One of the folks here at Epic is going to sit down with you, no obligation, by the way. They're going to sit down and do a full cash flow analysis with you, find out your money in, money out, take a look at all your different insurances, and really be able to sit down based on what you say, based on what you're looking for, show you a way forward by really giving you the education on all the things I just discussed, and also strategically showing you, if you ask, what you could do moving forward. Anyway, thanks for checking me out. Obviously, I want you to like and subscribe. Every time a new video comes out, you'll get that bell. And once again, the evaluation is for free and there's no obligation.